So first, I want to thank everyone here for making this an excellent event. Thank you to our host. It's been a great experience. So Blockchain Triangle is a digital finance platform for ESG and infrastructure assets. When you think about climate and ESG investment in digital assets, the world is changing in front of us. There's $4 trillion that need to go into climate assets in the next 12 years, and there's a $90 trillion climate resilient economy that's on the other side of it. Right now, we have a hairball of disconnected systems that route through APIs, and it's difficult to get that information to where it needs to go, which are stakeholders, which are investors, which are credit rating agencies, and our asset managers. This is one of the scary data points. For every unit of carbon that a bank branch or a bank office produces, there are 700 units of carbon on their loan book. Banks have minimal visibility on what's being produced at the carbon level, at the asset level. And that's really where we come into play. This is a climate finance problem that needs to get solved. The problem for ESG and climate reporting starts off with end investors who don't get information. They don't get that information because they're not connected to the end data points because the operators don't share that information. Governments also have this issue as well because they can't baseline and benchmark the end assets and the productivity and the climate impact of those assets on a real-time basis. That's what we solve. If you could start the video. So as you can see, we are a managed platform for big data and financial services. We combine blockchain and smart contracts that memorialize the relationship between stakeholders and end assets. What we are able to do is reduce cost of capital for those assets. And instead of it being $4 trillion that needs to be raised to fund these assets, we want to do it for $2 trillion. It's an investment platform that essentially looks at cost of capital. So in the infrastructure world, cost of capital is two sides. There's two different components to cost of capital in the infrastructure world. For big assets, $100 million and above, your cost of capital ranges anywhere between 5 or 7%, and you're getting capital from institutional investors like Macquarie, Ontario Teachers, Swiss Re, and the list goes on. For small-scale assets, and small-scale assets are increasingly making up the energy ecosystem because of distributed energy resources, with rooftop solar, with battery, with EV charging. All these subscale assets have a higher cost of capital that ranges in the 10 to 20% range. We're able to combine those assets together because we aggregate real-time cash flows from those assets and can bundle them into larger securitization. So instead of paying for an asset 10 to 20%, you would only get a 5 to 7% return. The first example that we did this in was in Bermuda with a rooftop solar installation at Royalhampton Dinghy Club. They were currently paying 55 cents per kilowatt hour for power because they have to import diesel to run generators on the island. They're not alone in this situation. Most island nations have this problem. By going to solar, it went sub 10 cents from a cost perspective. Now, in addition to the cost savings, infrastructure assets over the life are expensive assets. So when you think about a muni bond, you have investors, they're making 3, 4, or 5% depending on the risk of the municipality. But they have administration, reporting, and trustee service costs that range between 100 and 250 basis points. By breaking down the information flows to ones and zeros and being able to transfer them as connected assets to a larger pool, you're able to bring down that cost from anywhere between 25 and 65 basis points. This is also about a data-informed investing. Right now, investors, they're not getting real-time information on the performance of these assets. Neither are the governments. They're typically getting information 30 or 90 days after the fact, and anyone who's been involved in institutional finance knows 30 or 90 days after the fact could actually be more harm to you than good. Because there's immutable proof of the performance of these assets, we're able to create an ecosystem where digital twins of all assets can be created and managed and monitored. So therefore, you have sustainable smart cities that governments can see real-time information and plan for resilience. And the cost savings from operation and settlement is an additional benefit as well. By taking the smart meters and connecting them to the digital securities, you're able to handle all the administration reporting and trustee services on a real-time basis. The digital twins allows you to baseline and benchmark your asset pool, whether you are a corporation and you have a fleet of vehicles or rooftop solar, if you are an investment manager where you have portfolios of information, and ESG disclosure and climate compliance is now becoming mandated, as the UK did last week. This provides the tools for you to aggregate this information and disseminate it to the end stakeholders. And again, because we can do this at a cheaper price and a lower cost of capital, you can take that excess capital and recycle it to other purposes. We have a seamless platform of issuance for investors to raise money on, whether you're a startup, a climate asset, a solar farm, an ESG solution. We have solutions that we can distribute to our third parties. We are fully licensed under the Bermuda Monetary Authority as one of the first broker-dealers globally permitted to issue and sell digital assets. My background working at Morgan Stanley and BNP Paribas, managing business lines for those organizations, provided us the guidance alongside the rest of the management team that have run organizations inside these large institutions. As you see, we are DABA registered. We're currently working with the Shinnecock Nation, which is an Indian reservation in Long Island, New York. We're working with the government of Bermuda to create a crowdfunding platform called Invest Bermuda, which is an economic development platform for startups and for renewable assets and infrastructure assets. And we're excited to be working not only here with the CivTech Alliance, but also green backers on 26 for COP26. Today, we just released our white paper. We encourage you to go to our website. You can also access it by the QR code below. And it talks about all the different tools and technologies that are part of this ecosystem. One area to highlight is sustainability-linked bonds, which is a massively growing asset class. In 2018, it was $50 billion. This year, it'll be $1 trillion. This is essentially a carrot or stick framework where companies and governments for climate compliance get lower cost of capital or higher cost of capital. Our tools enable you to provide that KPI analysis. The team is a seasoned team. We come from both buy-side and sell-side backgrounds, managing hedge funds, private equity firms, and managing business lines at large institutions. Thank you very much.
Thanks very much, Darren. I mean, there's a huge complexity in this market. And again, much like for us, with this being the week of green finance at COP26, you can see how this absolutely plays into that. If we go back to the Bermuda case study bit, can you just talk us through some of those elements in a bit more detail?
Sure.
Because I think it's an interesting case study, which when scaled up, you can see the potential of this.
Yeah, absolutely. So really it comes down to fractionalization. Solar farms can be fractionalized. You can buy shares in a solar farm and get a return on that asset and see that performance real time. One of the things that I've learned in institutional finance is really two things. One is that big data is the game. Big data tells you how are you going to allocate and find alpha, and how are you going to manage your portfolio. The second thing, and this is after 20 years in investment services, and it's not that hard, investors want their money back as soon as possible. If you provide them real-time visibility on their capital, they're likely to keep it there longer. So in Bermuda, the example of the rooftop solar, they basically went out to their members and they said, we need to raise money in order to put solar on a roof. So instead of paying 55 cents when it's 88 degrees and 90% humidity, they're paying sub 10 cents for that same power. That's one example. The government is now rolling out rooftop solar across all their government buildings, and they want to go entirely solar over the next 5 to 10 years.
So that's an example where there's new installations being rolled out. What about retrofitting? Where does that come in?
There was not a lot of solar to begin with in Bermuda, surprisingly enough, but they're using that as a mechanism to retrofit other infrastructure systems, waste to energy, electric buses. They're really trying to, because they are an island nation and are exposed to sea level risk, and they happen to get a number of hurricanes each year, they are incentivized to see this transition. So Invest Bermuda is a great way to bring those assets to market and for the public to fund those assets in a public-private partnership.
So if you're looking at an ideal target customer, do you go to the institutions? Do you go to the energy companies? Do you go to the land or infrastructure owners, I suppose the asset owners? Yeah,
so the uniqueness about this solution and taking smart meters and connecting them to a digital asset and creating a digital twin is you can use that for all of those use cases. Governments can create better resilience programs by aggregating their assets and now seeing across the entire asset base using smart meters, because a lot of those assets already have smart meters. By aggregating that asset base, they can see performance real time. They can also provide transparency to citizens. So being able to provide the appropriate information to citizens so that they know how their capital is being used. In the case of Bermuda, they can show this is how many dollars we're making or saving our country every day by using solar. That's a powerful tool.
So, Rohit, yeah.
Thanks for the presentation. Can you explain how is your is your technology how is it linked to sustainable bonds or like green bonds? Like I said, they're essentially green bonds, right? So how does is your just because your asset class you've sort of mapped it out, you give real-time data of inputs, outputs, and real-time sort of electricity generation. Is that the data that I just want to understand how the sustainable bonds are sort of linked to, let's say, your app. Is it through the asset class or
So there's two different types of assets that you're referring to. Crowdfunding of a solar asset, where an investor can see real time how many dollars they're making on that solar asset and what's that indicative yield. Okay. In the sustainability bond situation, those are organizations and companies that are raising money. ArcelorMittal recently did a $9 billion raise to retrofit their equipment. Now, in order for them to get a certain interest rate, a lower interest rate, they need to hit benchmarks and KPIs. What we're able to do is, because we're taking smart meter data, which is the true source of the information, and deriving KPI performance levels, key performance indicators, then the investors and the issuer of that asset can ascertain the veracity of that information. Because it's immutable, it means that nothing can change, which means that if you want to be compliant and deliver a digital twin solution that meets both investor requirements and corporate requirements, sustainable linked bonds are the way to do it.
God, this is fascinating. It's like all these companies, you're involved in stuff that's just, in some ways, just mind-blowing in the potential as much as where you are now. So Darren, thank you so much.
Thank you very much.
Great to hear that. And please give it for Daniel.